Good morning from our global headquarters in New York. I'm Manish Krenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's start that agenda.
Tariff risk rises. President Trump calls for a much bigger rate than the 2.5% floated by Bessent.
In the very near future, we're going to be placing tariffs on foreign production of computer chips, semiconductors, and pharmaceuticals to return production of these essential goods to the United States of America.
And the trillion-dollar wipeout driven by DeepSeek pauses, Nvidia steadies.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
And Microsoft joins a lineup of TikTok suitors for its U.S. operations, according to President Trump. Good morning, Manis.
Danny, good morning. It's a battle for the oxygen, isn't it, between DeepSeek and the tariff risk. Right now, we have a bounce back in stock, indelibly etched on our mind. Nearly $600 billion worth of a wipeout on Nvidia. It bounces back this morning. Ray Dalio, I mean, there's a line from him. This is an AI bubble. But Nassim Taleb, the author of Black Swan, of course, talks about the fragility of the structure of these markets. $200 billion bounce back in Nvidia helps the NASDAQ bounce back. Bonds, 10 basis point rally yesterday. But what does the bond market now make of progressive, as I would say, progressive universal tariffs? Much bigger tariffs on the way. By the way, we have a 7-year auction today, $44 billion worth of paper. We had a double dose yesterday of 2s and 5s, which went fine. But what is universal gradualism in tariffs? Ground zero, it's the FX market. Scott Bessent, we understand, wants to push the 2.5% every month. Trump wants much more. And down go the currencies. The Aussie dollar down by 0.6%. The dollar is bid. And, of course, the dollar up against the yen.
Yeah, how much of a haven can treasuries be if we also have to incorporate tariffs now into their price? I just want to give us a quick look at Nvidia itself. Manis, you mentioned it's bouncing back. Not nearly enough to undo the nearly $600 billion plunge it had yesterday. It's up 5%. It responded to DeepSeek, calling it an excellent AI advancement.
Plus, GM is up as it prepares to report its earnings before the bell.
And Boeing shares little change this morning to slightly higher. It will be reporting its full earnings. Had a prelim report earlier last week that showed revenue missed as a result of the strike and its defense business.
And in just a few moments, Peter Oppenheimer from Goldman Sachs joins Danny and I. Later on in the hour, Patrick Armstrong of Plurimi Wealth, along with Nikos Stathopoulos of BC Partners.
Manis, looking at the market action, the fact that we're rebounding today, I think is notable. It goes to this idea that yesterday was a bad day, but it wasn't a panic. In fact, it was actually a good day. If you looked at all the other stocks, 70% of stocks rallied yesterday. The equal weighted was unchanged. Maybe what's actually happened in this market, if we've decided, it's not a winner takes all market. It's not these big AI players are going to win, but rather AI is now commoditized, and it benefits more stocks than just Nvidia and just the Mag 7.
Look, it goes to the view, I think Trump put it very well. This is just a wake-up call. We can argue as to whether there was something more malevolent around the release of DeepSeek a week after you had Stargate released in the United States of America. But my favorite line, you mentioned it yesterday morning, it's from Satya Nadella and a host of other people, and it is the Jevons paradox strikes again. As AI gets more efficient, accessible, the use will skyrocket. That's the commoditization.
Well, so this idea of Jevons paradox, I think it's worth an explanation because it is a little bit wonky. The idea is that as efficiencies increase, the use of resources goes up, not down. Example being, you had the Industrial Revolution, steam power gets more efficient, more energy is used. In Japan, they make more efficient cars. Oil usage goes up, not down. So all these energy companies that sold off, maybe that is overdone because we could just see more demand for data centers because more people are using AI.
And I think Kathy Wood was with us this morning in Europe, and she talked about the cost, the actual cost of inferencing, the cost of training, all dropping aggressively. And this is about the landscape shifting aggressively.
Well, elsewhere in Manis, the other thing for this market to grapple with, President Trump's latest vows on tariffs.
We'll also be placing tariffs on steel, aluminum, and copper, and things that we need for our military. We have to bring production back to our country. The incentive is going to be there because they have no tariff whatsoever. In fact, they have help from us if they build their plant in America. And we're going to look at pharmaceuticals, drugs. We're going to look at chips, semiconductors, and we're going to look at steel.
President Trump there was responding to a question about a report that his newly confirmed Treasury Secretary Scott Bessent is pushing for new universal tariffs on U.S. imports, starting at 2.5% and then to rise gradually. Trump said that he wants to enact much bigger tariffs. Let's bring in Bloomberg's EMEA News Director Rosalind Matheson. Roz, he also talks about very specific industries he wants to clamp down on. He's given himself the February 1st deadline before. Has this moved the needle? What difference did the comments he made make on the whole tariff conversation?
Well, it's clear through all of this. There's lots of back and forth, and as you say, seemingly contradictory comments at time. But the thread that runs through all of this is that Donald Trump really wants to keep tariffs on the table, whether it's as a negotiating tactic, whether he intends to follow through with blanket tariffs, whether it's a more specific arrangement, whether it's a gradual arrangement. He wants to have that in the toolbox, and he's going to use it very much, as we saw the other day on Colombia, as a political tool. And it can happen very quickly, and then it can reverse very quickly. And it was interesting to see on the back of those, the conversation about whether they would be gradual. I mean, our own reporting early this month said that there were a number of advisors very close to Donald Trump suggesting that this be a gradual thing between 2 and 5% going up on a monthly basis, and very much that Scott Bessent was part of that conversation. But Donald Trump seemingly really wants to keep countries and companies on edge by saying, hang on, I'm not so sure about gradual. I want the option to be able to go fast and heavy if I want to, and very much targeting those sectors you talked about. Autos, that's been one for him before in his prior administration. Steel's obviously come up very much for him before, but also pharmaceuticals, and that might put a bit of the pharma sector on edge in particular.
It's interesting, Ros, that we have this universal gradualism espoused by Bessent, but then you look at the other side, you've got Navarro and Jameson Greer. It's almost as if the hawks are in abeyance just at the moment. Trump wants one thing, but Bessent wants to roll out a progressive universal process. So again, a very divided house.
Well, that's right. It's going to be that question of who gets Trump's ear and who does he listen to in the minute, and does, he's famously known for being paying attention to the last thing that he hears in a room. Are you the person who gets that last word in? Is that Scott Bessent, the voice of gradualism there? But you are perhaps having hawks who are leaning very much into Trump's rhetoric, whereas others are arguing for caution. I mean, in the end, in all of this, Trump can be pragmatic. He's a deal maker. He's a businessman. He does change his mind if he thinks it's a better outcome to do so. So he can be flexible. The question is, can you be the person who argues for reason in the minute? So how much Scott Bessent has his ear is going to be interesting, because Scott Bessent will need to deliver, particularly on the tax front. Domestically, that's going to be very important to Trump, that's clear. So how much can he show he's enacting a little bit, at least, on Trump's agenda early? That's going to be really important.
Yep, it's, as Terry Haynes has called it, a team of rivals. We'll see who wins out. Roz, thank you so much. Roz Matheson there. Let's get you some other stories now that are trending on the terminal this morning. In an internal memo to staff, HSBC said it will wind down some of its investment banking operations in both Europe and the Americas. Instead, it will focus more on Asia and the Middle East. All of that part of the CEO's ongoing restructuring of the lender. An HSBC spokesperson confirmed the contents of that memo.
Bloomberg sources say Prime Minister Netanyahu is planning a visit to President Trump in Washington next week to discuss the ceasefire in Gaza. Skeptics have questioned whether the deal will hold, though its second phase, which should lead to a permanent end to the war. And the trip is not finalized and may partly depend on Netanyahu's health after recent surgery.
A majority of workers at a Whole Foods market in Philadelphia voted in favor of joining a union. It's the first time employees of the Amazon-owned grocer have organized in decades. The vote was passed 130 to 100, with workers pushing for higher wages and improved benefits.
Coming up in the show, tariff threats loom large. More on that and the shape of this market, a bounce back on Nvidia. All of that to come on Bloomberg. Bloomberg Brief. I'm Manish Krenny alongside Danny Berger here in New York. So DeepSeek-driven sell-off, it wiped out almost $1 trillion in market cap of the Nasdaq's 4 biggest companies. Nvidia alone saw a $600 billion wipeout in its market cap, marking the biggest fall in a U.S. stock market history. So is it time to buy the dip? That terrible question. Peter, good morning to you. Peter Oppenheimer is the chief global equity strategist at Goldman Sachs. We'll get to buy the dip in a moment. $1 trillion wipeout. You've seen many a fractious moment in these markets. Tell me what you saw yesterday and what it signaled to you, and what did you say to clients?
Hi, Manus. Yeah, well, I think that the first thing to say is that this needs to be seen in context. These stocks, of course, have had a tremendous rise, dominating the market over the last year or two. Roughly half of the S&P's return came from the biggest 5 stocks through the course of last year. And it did reflect and continues to reflect their very strong fundamentals. But of course, it's not just about outcomes, but outcomes relative to expectations. And I think as people came into the year, their confidence in the continued dynamics of these dominant tech stocks continuing to drive the market was probably too high. And so they were vulnerable, I think, to any setback in expectations. And that's really what we've seen.
But then we come back again today, Peter. I know we haven't fully made up of the damage that we had yesterday, but the irony of it is that these were the stocks that people had been fleeing to safety. It was seen as a safe part of this equity market. Do you think yesterday will force a change in investor behavior, that constant buying of the dip, constant buying tech is the only thing, the U.S. exceptionalism? Did all of that change yesterday?
Well, I don't think it did, because fundamentally the US exceptionalism story, which has really been dominant since the financial crisis, has reflected fundamentals. The US stock market has outpaced others in terms of its underlying profit growth, largely led by technology, which has outpaced other sectors. And of course, the dominant companies have been the key beneficiary of that. None of that has really changed. But of course, markets have become historically concentrated, and optimism going into this year was extremely high, and that leaves them vulnerable to a setback. But I don't think it really changes the underlying fundamental story, and we shouldn't lose focus on the fact that the global economy, and the US in particular, remains pretty robust, and interest rates are coming down, and those are underlying foundations that we think are still pretty supportive for the market and indeed the tech sector.
Then on a relative basis, Peter, with those pillars underpinning the market, is it a moment where breadth, equal weight did fine yesterday, the Russell held up relatively
right
to the rest of the market? And I know that there's been many a proponent of go for breadth, go for a little bit more diversity and defensiveness. Does that not just provoke that move, but it pushes that needs to be the top priority?
Yeah, absolutely. And this has been a key driver of our own recommendations over the course of the last couple of months, recognizing that the underlying fundamentals from a macro perspective are positive for equities, but at the same time, there's significant risk in the degree of concentration that we've been seeing. And we have been recommending looking at diversification strategies, including hedging, including looking at the equally weighted S&P or the S&P 400, looking at companies that are quality growth compounders outside of the tech sector, and also looking at a little bit more geographic diversification as well. And so those have been sort of central drivers of our own recommendations, and I think that still makes a lot of sense in the context of this setback that we're seeing.
Which, by the way, if you'd owned the equal weighted index yesterday, you would have actually slightly gained. Peter, we had this event that really upset markets, and it wasn't even on the calendar. And we have so much more for the rest of the week. You have Microsoft and Meta earnings tomorrow. Then you have Tesla earnings. You also have a Fed decision, an ECB decision, not to mention a President Donald Trump, who every day seems to have a different word to say on tariffs. How fragile are we for all of these different things that are being thrown at the market?
Well, I think we need to differentiate here between structural vulnerabilities and vulnerabilities to a correction. Again, we shouldn't lose sight of the fact that the global economy remains in pretty good shape. the US in particular does. And we are seeing some progress on inflation moderation, and interest rates are likely to continue to ease. When we've seen that combination of factors in the past, it's been broadly supportive for equities. But the last couple of years have seen one of the strongest rises in equities in history, with very low volatility and very high concentration, and that does leave markets vulnerable to a correction. I would say this is a correction, not a bear market, and the drivers of diversification are beginning to pay off, and I think that will continue to be true for a while now. There's lots of very good quality companies that are not very extreme in valuation, which are growing earnings and dividends pretty nicely, and that diversification should be seen both across the technology sector, across different sectors and even different geographies. It's interesting that Europe has been the best performing stock market so far this year, an area where people had very little confidence at the end of last year, but again offers a lot of good value and selectively some very good quality global companies that are seeing earnings growing.
Peter, really wonderful to catch up with you this morning. We are happy you survived the wreckage of yesterday. Peter Oppenheimer, always with a very sound take of Goldman Sachs. Coming up, Microsoft in talks, potentially, to buy TikTok, at least their U.S. operations. That's according to President Trump. Bringing the details coming up on your brief.
It's Bloomberg Brief. I'm Manus Craney alongside Danny Berger here in New York. Front page news. This is what's making headlines around the world. First up, we've got the New York Times. They lead with the White House ordering all federal grants and loans to be paused. Now, the memo from the Budget Office signaled it would continue until at least February. The OMB acting director said the pause was needed to ensure federal programs align with the president's policy priorities.
Next up, the Washington Post reporting that Palestinians are traveling back to northern Gaza after months of being displaced during the Israel-Hamas war. The mass migration began after the second round of hostage for prisoner exchanges that took place over the weekend. A spokesman for Hamas said that it is a message of defiance to any new attempt to displace them.
And Bloomberg leads with President Trump saying that Microsoft is in talks to acquire, you got it, TikTok. He addressed the gathering of Republican lawmakers in Florida.
I became a little bit jaded toward TikTok, but we'll see what happens. We're going to have a lot of people bidding on it, and if we can save all that voice and all the jobs, and China won't be involved. You don't want China involved, but we'll see what happens.
Tom Kenzie's tracking the story for us. Tom, good to see you. Microsoft formally being entered the fray by the president. This isn't their first rodeo. 2020, Satya Nadella was there. Yep. I think he said it was the strangest thing I've ever worked on, but he's back at the table.
According to President Trump, he's back at the table. According to President Trump, he's back at the table. And as you correctly say, not a big surprise if indeed that is the case, given that Microsoft and Oracle were looking at TikTok back in 2020, before, of course, that was derailed by the legal challenges that previous attempt by Trump to ban it faced. So, amongst the names now, Microsoft. We haven't heard about Oracle. We have heard about Microsoft. We've heard about the AI chatbot company Perplexity that is making a lot of progress. They put in an official bid. We've had a bid as well from Frank McCourt, former owner, of course, of the LA Dodgers. And then, of course, the Bloomberg reporting that possibly Chinese lawmakers are weighing up Musk, possibly through X, buying TikTok. So those seem to be the names at play right now. The president says he loves a bidding war. He wants to see how this plays out. He signed the executive order, of course, delaying the ban of TikTok that would have come through on January the 19th. That is a 75-day process. The timing is there. They've got to work through this pretty quickly. These seem to be the main names now bidding for this potential asset.
Tom, the thing I always keep coming back to, though, whenever we get any of these new names is, does TikTok actually want to sell itself? I mean, they've had since last April. It doesn't seem that time is the issue for them.
They were constructive on this idea back in 2020. They've been very clear, ByteDance, the parent company based in Beijing, been very clear that a sale is not what they are looking at right now. And then, of course, there's arguably the more important question, which was, how does Beijing itself think about this? And since 2020, they've put in place legislation and law in China around national security and export control laws, both of which would likely hamper the sale, particularly the transfer of the algorithm that sits in China to any US buyer of this. How valuable is TikTok without the algorithm is an important question, because that is the secret sauce of this company. It's very hard to see, most analysts would say, very hard to see how China would allow that algorithm to be signed off and sent over to the US as part of this deal. All of this, of course, wrapped up in the geopolitics, in the brinkmanship between Trump and Xi Jinping in terms of how this relationship unfolds. It will be potentially a source of leverage for Beijing going forward. So far, they've got no indication they want to sign off on the sale of the algorithm.
Tom, thank you so much for that and for all of your coverage already. A busy start to the week for you. Bloomberg's Tom McKenzie there. From tech to tariffs, Trump wants more than 2.5% as floated by Besant. What do you get? You get dollar strengthening versus the euro. It's up quite a bit this morning. Euro weaker by more than 0.5%, Manus.
Indeed, and this is the debate in the FX market. And we see these reaction functions immediately. Every time we talk about tariffs, whether it's going to be the 2.5% that we understand Besant wants, or is it going to be something much more? And ground zero in the trade wars is going to be Australia. Australia, in terms of their relationship with China, that is the biggest sort of delta FX in this play. And then you can see the dollar up against the yen as well. Everybody's in the sideline. This is about reshaping supply chains, commodities under pressure.
I mean, it just goes to show you can have a big strengthening of the yen yesterday in this flight to safety after the tech wreck. Yeah. And that all can be undone with just a few words from President Trump. Okay, coming up, we're going to get back to that tech wreck, the AI emperor exposed with no clothes, or is it an overblown panic? We're going to catch up with Patrick Armstrong of Plurimi Wealth. All to come on your Bloomberg Brief. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger here alongside Manus Cranny. Let's set your agenda.
Tariff risk rises. President Trump calls for a much bigger rate than the 2.5% floated by Besant.
In the very near future, we're going to be placing tariffs on foreign production of computer chips, semiconductors, and pharmaceuticals to return production of these essential goods to the United States of America.
$1 trillion wipeout driven by DeepSeek pauses. Nvidia steadies.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
And Microsoft joins the lineup of TikTok suitors for its U.S. operations, according to President Trump. Danny, good morning. It's bounce back day.
Well, it was a bad day yesterday.
It was.
Not a panic, and maybe that is underscored by the fact that we are bouncing back 0.7% for NASDAQ, and we're looking at Nvidia rebounding about 5%. That doesn't completely undo the nearly $6 billion that they lost, which, by the way, if you'd owned the equal weighted measure of the S&P yesterday, you wouldn't have lost any money. So actually a good day for 70% of this equity market. You did see a rally in treasuries as we fled to havens, but that starts to undo itself with the threat of more tariffs. February 1st is the deadline Trump has given himself. He says he wants more than the 2.5% that Scott Besant has floated as a universal tariff. You also see dollar strength coming this morning, too, as a result of that. Now, it's the morning after the markets woke up to the release of R1 from DeepSeek, something that sent shockwaves through Silicon Valley and Wall Street. Tech executives reacted to DeepSeek. Nvidia's Jensen Huang, maybe at ground zero of the reaction, saying it's an excellent AI advancement. OpenAI Sam Altman calling it impressive, particularly around what they're able to deliver for the price. And Microsoft's Satya Nadella tweeting that users of AI will skyrocket as it gets more efficient. Investors have been reacting as well. Here's what ARK Investment Management CEO Kathy Wood had to say.
We think platform as a service, so think Palantir, is going to gain significant share. And this news yesterday, I think, highlights that. We think infrastructure as a service is going to stabilize a share. Software as a service will come down a share. However, I've said all of that. All of them will be growing rapidly. It's just how rapid.
Okay. Let's bring in Bloomberg Intelligence Senior Analyst Mandeep Singh. So, Mandeep, things are calm in the market now, so we can take a step back and stop the whole freak out. As we kind of assess what's been falling, what's been under pain, what reactions look overdone to you, or what is justified in kind of the freak out of yesterday?
Well, look, I think what we have seen now is clearly move towards, bringing down the inferencing costs, even the training costs, and anyone who's planning, to build a bigger cluster. So the biggest cluster right now is a 100K GPU cluster. People have been talking about building 1 million GPU clusters. I think they will be rethinking, the plans around building larger data centers, writing checks for, training that are north of $1 billion, because frankly speaking, the focus will move towards hardware efficiency going forward, simply because what DeepSeek has shown is you can do a lot more with, spending a fewer dollars upfront and focusing more on inferencing. And I think open source has been validated. So I expect a lot of software companies moving towards open source as a result of this. Maybe some of these foundational labs that haven't gone the open source route may start rethinking about using some of their models and putting them out for open source use.
How does the pressure landscape change here? Danny and I have been talking about this in terms of the open source, the Gemini model, relative to Sam Altman. Sam Altman obviously closed. He said it's an impressive model, and we're going to have to deliver much more. More pressure on Altman and perhaps an escalation up for Google?
Absolutely. I think for someone like OpenAI, clearly, not having to spend a lot of money upfront on training their next model, GPT-5, is probably a good thing, but they are involved in Project Stargate. So, they have been touting that the next model will be a lot bigger and it requires much bigger investment. At the same time, Gemini, I feel, has been focused more on lowering the cost per token. That has been their approach. So from that perspective, I think they'll feel much better about what happened yesterday. And look, they have the largest AI deployment when it comes to their search business, the traditional search, where they've been adding Gen AI overviews. Well, lower costs help them, stabilize their margins and questions that were being asked about what it does to traditional search margins. So from that perspective, I think it helps Google.
Perhaps as the dark horse and the winner in all of this wipeout, trillion-dollar wipeout yesterday. Some reprieve this morning. Mandeep, thank you very much. Mandeep Singh from Bloomberg Intelligence. Here's a take from Patrick Armstrong, Plurimi Wealth. He says this: DeepSeek may have exposed the emperor with no clothes and revealing that immense AI budgets might not guarantee superior results. Pleased to say Patrick joins us now, CIO of Plurimi Wealth. Look, what did we learn yesterday? Who is swimming naked? And do you think really it's more about that impenetrable moat around Nvidia has been breached?
That's exactly it. I think Nvidia remains an incredible company today. The profit margins that we had discounted out for the next 7 years, you have to accelerate the decline in profit margins based on what we've learned over the last week, that Nvidia is still the leading processor. It's going to get billions and billions of spend, but there are cheaper ways to do it. And it's definitely hurts Nvidia's valuation, not because anything's changed with Nvidia, but because there will be competition, lower cost ways to do things, and that'll probably lead to less sustainable, really incredible profit margins they're generating today.
Patrick, I just wonder what you make of the timing and the freak out of all of this. I've been speaking about this morning, this idea that Gemini from Google has been doing something similar. Just no one's been reading the research. That is trying to bring costs down. Mandeep was just talking about it, using a very same method, very similar method to what DeepSeek is doing. What does it say to you about the fragility of this moment, that we can get the thing released last week, we're just ahead of tech earnings, and you have that level of wipeout occur on this equity market?
The level of wipeout was incredible, but the run-up was also incredible. So we've probably given back several months of NVIDIA's performance, and I think it's perfectly reasonable. I owned NVIDIA last week. I'm continuing to own it today. I sold put options on it, March $110 put options as a mildly bullish strategy, just thinking that the sell-off is overdone. But it has changed. NVIDIA's future profitability isn't going to be as strong as I thought it was last week. This definitely is going to hurt their business model, but it's not destroying the business model. When I referred to Emperor's clothes, that was a bit of a strong metaphor. It is impacting profitability, but it's not destroying the profitability. It is still an incredible company. And I think the market, 10% sell-off, made perfect sense to me. I think it did get a bit overdone yesterday, though.
we like strong statements here. Talk to me about the geopolitical ramifications. Any other 2 days, we would have been talking, first of all, about tariffs, but the geopolitics of this acceleration by China in the AI space. Donald Trump says it was a wake-up call. Geopolitically, what are the ramifications?
It probably is a wake-up call, and it's also shown potentially the ability to do it, that some of the restrictions about getting the Nvidia processors and chips, they may not have been as effective at stopping potential geopolitical adversaries of the United States of developing the AI and the large language models. So there's a lot of ramifications across profitability, across the political framework, and Trump never misses a chance to have a bargaining chip. And I think access to technology is going to be part of his discussions with China. So there's nothing surprising there.
Patrick, again, you're talking about some really big consequences. You yourself have had a reappraisal of how you're viewing Nvidia and future profits. Why then is the market rebounding today? There were so many people talking about yesterday that this is a sea change. This challenges U.S. exceptionalism. We need to rethink these valuations. Yet plenty of people are willing to step in and buy the dip this morning.
Well, it was such an extreme move that the valuations of Nvidia this time 2 days ago were 35 times 12 months forecast earnings. Today or yesterday was trading at 26 times. So the sell-off was all multiple contraction yesterday. We'll see if the earnings revisions do get revised lower. We'll get some guidance on that as the big companies report this week. I don't expect they'll really be acknowledging a change on their spend. If you are going to want to develop this and be the leading edge, you are going to have to spend the tens and hundreds of billions. But there will, underneath that area of innovation and leadership that the big companies will probably want to get to, there will be a second tier of Me Too companies that can do a pretty credible job at rolling out things as well.
Okay, well, you're brave, right in the put options there, Patrick, but you got the bounce back, so you got a nice tail behind you this morning. Patrick Armstrong, the CIO of Plurimi Wealth. Other stories trending on the Bloomberg terminal this morning. This is what we've got for you. President Trump wants to impose across-the-board tariffs that are much bigger than the 2.5% to reshape the U.S. supply chains, threaten tariffs on specific sectors, including semiconductors, steel, copper, and aluminium. Trump also strongly suggested he could also impose them on automobiles from Canada and Mexico.
Scott Bessent has been confirmed as the next U.S. Secretary of the Treasury. He won a Senate vote of 68 to 29. Besides the support of all Republican senators, he also secured the backing of 1 independent and 15 Democrats. The former hedge fund manager now becomes Trump's 5th cabinet pick to get confirmed.
And in an internal memo to staff, HSBC said it would wind down some of its investment banking operations in Europe and here in the Americas and focus more on Asia and the Middle East. It's all part of the CEO's ongoing restructuring of the lender. A HSBC spokesperson confirmed the contents of the memo. Coming up, we're going to turn to the world of private equity. We've got the BC Partners chairman in the house. That's next on Bloomberg.
I guess the rethinking is probably more along the lines of how do you essentially avoid just continuing to put more and more money into the US? There's been lots of initiatives that's drawn capital into the US. The markets have been very hot, as we all know, the last couple of years. You know, we try to run a diversified international portfolio. So in some ways, it's actually, you know, where in the rest of the world do you see growth and do you see a return on the risk you're going to take?
That was the Ontario Teacher Pensions Plan CEO Joe Taylor speaking with Bloomberg at Davos. Joining us now is the perfect voice on this. Where do you want to be invested? It is Nikos Stathopoulos, chairman of Europe at BC Partners, with a firm has 40 billion euros of assets under management. Nikos, so great to speak with you. And I wanted to talk with you specifically because everybody is just so gung-ho, the U.S., American exceptionalism. There we had Joe Taylor saying, people are overlooking the rest of the world, and there are opportunities to be had in Europe. Do you think that's right? Are investment funds ignoring Europe? Is that where the fertile ground is right now?
Well, it's great to see you again as well, Danny, as always. Yes, I think there's a lot to do in Europe still. Europe is not growing as fast as the U.S., which is always the, call it, criticism that we're getting. But it's a complex space. It's still very fragmented, but there's still a lot of opportunity because you do have local champions, you have European champions, you have companies which are exporting, companies that are very active and doing very well. As long as people can navigate the European landscape, which is complex, as I said, it's diverse, it's not one country, then we do think there's still a lot of opportunity. If you look at the deal activity that happened last year, Europe was up about 70% in terms of deals done, and therefore I still think there's a lot of opportunity to invest in Europe and make good returns.
Yeah, especially again if everybody's ignoring it and just focusing on the U.S. Nikos, you mentioned this idea of exporters, which of course, especially if you're selling to a market like the U.S., that's fertile ground. But how do you assess just the fire hose of information coming out of the Trump White House of not yet tariffs, but threats of tariffs? Does it make you rethink any exposures or potential deals?
It does, and naturally, you know, every other day we hear new tariffs being announced and everything else. And I do think that this is probably the biggest concern at this moment that, as investors and certainly as European citizens, people have. Now, having said that, if, how, and when these tariffs will be implemented is still uncertain. But now, naturally, we should brace ourselves for these. And it does impact the industries that we look at and we look to invest in. Certainly, we at BC Partners are not that exposed, at least, to the tariffs or to the industries that President Trump has been announcing, like automakers, etc. But it's true that, as I said, every other day there will be a couple more industries that this will impact. The beauty of our industry has been that we are patient capital, we're very diversified as investors, and therefore we don't need to invest in certain industries if we think that these will have some headwinds. But tariffs will impact indeed where we invest, how we invest, and probably the timing of when we invest.
Nico, good morning to you. Let's just take that a little bit further. I mean, you look at, as Danny said, you know, a fire hose of policy. The exit market was presumed to have thought, and it was going to be a great storming year for everybody. Do you think that that's dislocated now? Do you think that that's pushed back with the level of policy uncertainty pretty much on a daily basis at this juncture?
Yeah, well, listen, the exit, you're totally right, Manu. So the exits has been a focus of private equity forever, but even more so, frankly, in the last year or two, because our investors are demanding liquidity, and rightly so. 24 was a relatively low year of exit overall. I mean, we have been fortunate to have had probably our most active exit year with about 12 billion euros return to our LPs in 2024. But that's certainly, I would say, priority number 1, 2, and 3 at the moment in the private equity industry. There's been a lot of over-allocation in the sector from some of our LPs and our investors, and they're looking to get money back before they actually reinvest back to funds during fundraising. So exit will be a top priority. I do think that announcements like tariffs and everything else that we hear recently will potentially curb some of that activity if they impact the sectors that we're dealing with. But I also think that Europe will end up having to pivot as part of these announcements and address its competitiveness, its bureaucracy, its taxes, and other things that have been criticized, and potentially rightly so, by our U.S. counterparts. But I do think exits will be a top priority at the moment.
Nikos, that last point's really interesting. Someone put it to me that Trump is making Europe great again. I mean, you heard it in Davos, right? A lot of policymakers, even Christine Lagarde, talking about the need for a more competitive Europe. How does that actually happen, though? Because you have had things like the Draghi report, and Europe has yet to come together. Do you really believe that that is the future for Europe, a more competitive group of nations?
There's no doubt in my mind that Europe has to address its competitiveness. And as I said, even though we don't like some of the tariffs that are being announced or the intentions or the rhetoric that we hear, I do think it will put pressure on Europe to act. How it's done, I'm not a policymaker myself, but I certainly think that focus on regulation or deregulation for that matter, focus on taxes, focus on bureaucracy, focusing on staff and labor and staff shortage in some industries will have to be there. And even we may not necessarily like it, we do know that Europe is growing less than the US in terms of GDP growth. But I don't think it's just one KPI. It's not just one metric that people should look at. Is the overall picture. And ironically, I also believe that I think that the tariffs will focus and make us potentially a more competitive continent. And I'm talking about this side of the pond.
Well, certainly Trump won forced an entire rethink on defense, and it's provoking a number of rethinks. Let's try and see where you are in terms of deals. EuroLeague basketball, Danny and I were chatting about this before we came on. You've edged out the rivals, General Atlantic and Saudi Arabia. How did you manage that? Saudi Arabia has got deep, deep pockets.
I think a lot has to do with our knowledge and experience in the media landscape. We've looked at sports as an industry for a very long time. It's become almost a $1 trillion industry. I think that ecosystem, however, is very complex. I do think it needs to be institutionalized. And I think with the evolution of that space, especially on the media side and the technology side, it needs investors who really understand it and who can actually bring value. I think the way we managed to get these exclusive discussions that we're currently with EuroLeague is because I do think we're bringing apart from capital, of course, that many people have, is that media expertise and that understanding of how to monetize and commercialize content more efficiently, which I do think in European basketball in particular, although other European sports as well, is behind our counterparts in the U.S.
Nikos, can we break a little bit of news here? I know you're in exclusive conversations with EuroLeague, according to reports. Can we expect a deal anytime soon?
Sometimes, as you can imagine, it's not necessarily up to the buyer. It's also up to the seller. And leagues are complex, and it includes several clubs. So I hope we will be able to get to the finishing line, but it's not just up to us.
Nikos, fair enough. Well, we wish you the best for it and hope to see you courtside at the EuroLeague. Nikos Stathopoulos of BC Partners, thank you so much for joining us. Manus.
Coming up, we've got a host of earnings on deck. We'll take you through and set your agenda for you in just a moment.
Let's get you set up for your trading day on this Tuesday. We're going to get earnings from Boeing, General Motors, and Lockheed Martin. All of that comes before the market open. Then some data, durable goods orders. That will come at 8:30 a.m. Eastern, then followed by Conference Board consumer confidence. That comes at 10 a.m. Then we got some more earnings. Starbucks reports its earnings after the market close. And by the way, after the Europe market close, we will be getting LVMH. Manus.
Danny, it's a battle over the oxygen this morning between the tariffs and the tech post that DeepSeek. Right, you've got a bounce back on Nvidia, 5.33%. $600 billion wipeout this morning, $35 billion per 1%. So we're up about $200 billion there. Broadcom also gaining, having lost nearly $200 billion yesterday. So there's this moment of reprieve on $1 trillion for the top stocks in the US wipeout yesterday. Arista Networks, let's just close it off with that. They're down. They had been down 22% in the last session. So again, it's this sort of palpable relief in this market at the moment. But of course, there's the other major story. It's about the scale of tariffs and what cadence will we get.
It's so true, Manus. If we hadn't spent all yesterday freaking out about DeepSeek, we'd be talking more about the board behind you. That is a dollar that is strengthening. And President Trump, when asked about the reporting on Scott Bessent wanting 2.5% universal tariffs, he says he wants much higher. Manus, he's given himself deadline of February 1st. That's Saturday.
That is Saturday, and that's really going to shape the next. Just think of what you've had. We've had 60% risk of tariffs, 25% tariffs, 25% tariffs on Colombia, and then it was rolled back all on Sunday afternoon. So if you want to understand universal gradualism, it may take more than between now and Saturday to get it there.
I mean, it very well might, especially considering he only just got his Treasury Secretary confirmed. Okay, that is it for Bloomberg Brief. Surveillance will take the reins from here on this Tuesday.